Hey everyone, welcome to another episode of ADMAIL. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hi everyone and welcome to another episode of ADMAIL. I'm Adam Bergman, tax attorney and founder of IRA Financial. And today's podcast, 3 superb questions. One involving IRAs and separations. What happens? Is it taxable? Another, how to invest in a private equity fund with an IRA. From a subscription agreement standpoint, what is the process of making that investment? And then finally, Roth conversions. If you own real estate in an IRA and want to convert that home to a Roth, you actually have to sell the home. We'll see in a second. So buckle up. It's going to be a really fun episode. Hopefully you're going to learn a lot, because that's the whole point of today's, or all really of the podcast I do, but especially ADMAILs. The whole concept is you get to learn from each other, have a whole team of amazing clients, and we get to learn from each other, because whether you're a client of IRA Financial or not, I don't care. I'm going to answer your questions and share the knowledge I have so that we all can become better and smarter self-directed investors. That's really the only goal for doing the podcast. So question number 1 from YouTube. I'm getting divorced and will need to provide my ex with a portion of my IRA. How will that be done? And will it be taxable? So unfortunately, I've been doing this 14 years. Separations, divorces, deaths happens. In the case of a divorce, there's usually a court order called a quadra, Qualified Domestic Relief Award. And generally, the court will decide, okay, based off the settlement, the agreement with the parties, this portion of the IRA will go to your ex. And generally, it's a taxable event. It literally, you open an IRA in the other spouse's or former spouse's name, and it's just a transfer. It's tax-free. There's no tax because it's part of this qualified domestic relief court. It's part of the separation agreement from the court, so it is tax-free. And essentially, you're just moving the IRA from one spouse to the other, and then that spouse has the IRA in his or her name, and they kind of begin as that IRA was there. So super simple. As I mentioned, we kind of do this all the time, but it's something our team, our ops team, can help you do. God forbid you're in that situation, or maybe something you want to do. That's okay. Just know it's not taxable, and we do this all the time, and we could execute any court order in a tax efficient manner. So we're here to help. If you have any questions about a pending separation or divorce or ongoing, we're here to help. So just let us know. Second question is from Peter W. of Greenwich, Connecticut. Peter wants to know, I want to make a self-directed IRA investment into a private equity fund. How would the process work with completing the subscription docs? So we do this also thousands of times a year. It's super simple, Peter. So step 1, you open an account with IRA Financial through our app, website, super easy. Takes 10 minutes. Takes a few days. We'll get the account process. We have to do, obviously, some KYC to make sure, as a regulated company, just that you are allowed and able to open an IRA account. Once that's done, which generally takes 24 hours or so, if you're transferring money to an IRA, we'll initiate the transfer based off the info you submit. It's a tax-free transfer. At that point, we'll notify you when the funds hit. You'll then go to our app or website, upload the subscription docs, which basically is some information to prove that you're a accredited investor. You generally need to complete the personal info. We can't attest if you're accredited. What's an accredited investor? Generally someone that has $1 million in net worth, excluding your primary residence, or someone that has adjusted gross income, married, filed jointly, of at least $300,000 annually. So you obviously would have to attest to that. You'd put in whatever personal info you need, and we would sign it as the IRA custodian, since the investment will be named in the name of the IRA for the benefit of you, Peter. And then once we sign the subscription docs, we'll get the okay. We will wire the funds to the fund. Generally, we need a verbal. The only time we really have to talk to you is to verbal wire. That's for your security, to make sure that there's no social engineering, that we're talking to you. We'll ask you some security questions based off your background, based on some activity in your account, just to confirm it's you. And ultimately, we'll wire the funds to the private equity fund. Then the investment will be named in the name of the IRA. It's super simple and easy. We do all the heavy lifting. We'll do all the transfer. Once you can DocuSign on our app, it's super simple. A couple clicks and you're done. And the only thing you just need to complete on the subscription docs are just the attestation that you are a accredited investor. Other than that, we can handle it, sign it, and we'll wire the money. And then you're good to go. So if you have self-directed IRA investments, you're looking to do an investment fund, reach out to our team, whether it's a new account team, investment team, deposit team. We will help you, get this investment done so that you're ready to go and can make your investment. Third question is from Jeremy F. of Yonkers, New York. Jeremy wants to know, I want to do a Roth conversion of a home I own in a self-directed IRA. Do I have to actually sell the house to my Roth IRA? So great question, Jeremy. I get this a lot. The answer is no. Thank God, right? That would be a lot of paperwork and a lot of costs. No, a Roth conversion is simply paperwork. That's all it is. We do it all. Okay. The only thing you need to do is tell us you want to do a conversion, give us a value. So you go on our app or website, complete a Roth conversion form. You put your name, your account number, the amount you want to convert, whether it's cash, whether it's a home, the address, third-party valuation. Doesn't need to be from Ernst & Young. It could be from Trulio, Zillow, an independent person, a realtor letter, anything. Just really shouldn't be you saying the house is worth X. And that's it. If you have a IRA LLC, we'll amend your operating agreement to show that the Roth owns it instead of the traditional. If you have a full service where the IRA owns the property directly, we'll suggest that you simply just amend the title and add the words Roth at the end. So it would be IRA Financial Trust Company, CFBO Jeremy F. IRA. We would just have you amend the title, not any transfers, so there's no taxes. It's just a small fee, and amend the name to add Roth in it. And that would be it. We would then 1099 you, copy to the IRS, showing the value of that Roth conversion. And then ultimately, you'd pay tax on the value of the conversion April 15th of the following year on your 1040. It's ordinary income tax, not capital gains, and it's added to all the other income you have for that year, whether it's self-employment income, W-2, whatever it is. When you aggregate everything, that's what you'll get to determine your tax rate. So that's obviously something you need to keep in mind. Can you pay the tax? A couple other things to determine whether this makes sense for you, Jeremy, is your age. Doing a Roth conversion at 35 probably makes more sense than 85. What do you think your tax rate would be when you hit 73 RMD age? Do you think of a low tax rate, a high tax rate? If you have a high tax rate, maybe conversions make more sense today, because being able to pull that money out tax-free once you're 59 and a half and the Roth's been open 5 years is super tax advantageous if you're in a high tax bracket. Whereas if you're in a low tax bracket, the Roth conversion maybe has less juice because you're just saving less tax since your tax bracket is lower. But the big thing is, can you afford the tax? There's ways to do partial conversions where we can quick claim 10% of the property, 50%, 80% to the Roth. So that's possible. Same with an LLC. We would just show that Roth owning 10% of the LLC or 30%, whatever the number was. And then you could just do it over time to make sure you have sufficient income to pay the tax. So thank you, Jeremy. Thank you, Peter. Thank you, the individual who submitted the question on YouTube. If you have questions, you can leave comments, leave questions on our YouTube channel, on social media, whether it's Twitter, Instagram, Facebook. Just say ADMAIL, ask Adam, or just have a question. We will, it'll get to me, trust me. You can also email us at info@IRA Financial if you have any question. It's anonymous, so don't worry if you're getting divorced or whatever. I'm not going to say your name. It's all about just learning from each other, And these are great questions. I look forward to each week when I get my producer puts the questions in queue and we kind of go through them. I look forward to the exercise because it's fun to kind of be challenged. And a lot of times I'm like, hey, I got to think about this, got to research this. Sometimes I'm maybe not in the library anymore, but I'm definitely scouring online to get a complete answer. And sometimes I pick the brain of some of my tax lawyer contacts to get their thoughts or RISA. So appreciate it. Want to just hope everyone's having a great day. Thank you guys for your support. Thanks for listening. If you're watching on YouTube, appreciate it. And have an amazing rest of your day. Take care.